Ever wondered how much money is circulating the Namibian economy? Or how banks in Namibia determine the interest? Have you ever wondered how much money is circulating the Namibian economy? Or how banks in Namibia determine the interest rates that they charge you to borrow from them? Well, both those things are determined by what is called monetary policy. Here's what it is, and more importantly, how it affects you. Monetary policy involves the actions taken by a country to influence two primary things. One, the total quantity of money circulating the country, and two, the interest rates within that country. Most countries do this to accomplish the following goals: the stability of the prices of goods and services, and economic growth. For Namibia specifically, monetary policy also aims to maintain the one-to-one fixed currency peg between the Namibian dollar and the South African rand. This allows Namibia to import stable inflation from South Africa to accomplish the two goals of price stability and economic growth. A common monetary policy tool is the repo rate. This is the rate at which commercial banks borrow money from the Bank of Namibia. The repo rate determines another interest rate called the prime rate, which is the benchmark interest rate commercial banks use when lending to their clients. This is what determines the interest rate charged for loans such as home mortgages and vehicle financing, as well as business and personal loans. The Bank of Namibia is the sole monetary authority in Namibia by law. The Monetary Policy Committee within the bank meets every 2 months to determine the monetary policy stance for the next 2 months. For more information, you can contact the Bank of Namibia through any one of the following platforms. Bank of Namibia, keeping you in the loop about policies that affect you. Have you ever wondered how much money is circulating the Namibian economy? Or how banks in Namibia determine the interest rates that they charge you to borrow from them? Well, both those things are determined by what is called monetary policy. Here's what it is, and more importantly, how it affects you. Monetary policy involves the actions taken by a country to influence two primary things. One, the total quantity of money circulating the country, and two, the interest rates within that country. Most countries do this to accomplish the following goals: the stability of the prices of goods and services, and economic growth. For Namibia specifically, monetary policy also aims to maintain the one-to-one fixed currency peg between the Namibian dollar and the South African rand. This allows Namibia to import stable inflation from South Africa to accomplish the two goals of price stability and economic growth. A common monetary policy tool is the repo rate. This is the rate at which commercial banks borrow money from the Bank of Namibia. The repo rate determines another interest rate called the prime rate, which is the benchmark interest rate commercial banks use when lending to their clients. This is what determines the interest rate charged for loans such as home mortgages and vehicle financing, as well as business and personal loans. The Bank of Namibia is the sole monetary authority in Namibia by law. The Monetary Policy Committee within the bank meets every 2 months to determine the monetary policy stance for the next 2 months. For more information, you can contact the Bank of Namibia through any one of the following platforms. Bank of Namibia, keeping you in the loop about policies that affect you. Have you ever wondered how much money is circulating the Namibian economy? Or how banks in Namibia determine the interest rates that they charge you to borrow from them? Well, both those things are determined by what is called monetary policy. Here's what it is, and more importantly, how it affects you. Monetary policy involves the actions taken by a country to influence two primary things. One, the total quantity of money circulating the country, and two, the interest rates within that country. Most countries do this to accomplish the following goals: the stability of the prices of goods and services, and economic growth. For Namibia specifically, monetary policy also aims to maintain the one-to-one fixed currency peg between the Namibian dollar and the South African rand. This allows Namibia to import stable inflation from South Africa to accomplish the two goals of price stability and economic growth. A common monetary policy tool is the repo rate. This is the rate at which commercial banks borrow money from the Bank of Namibia. The repo rate determines another interest rate called the prime rate, which is the benchmark interest rate commercial banks use when lending to their clients. This is what determines the interest rate charged for loans such as home mortgages and vehicle financing, as well as business and personal loans. The Bank of Namibia is the sole monetary authority in Namibia by law. The Monetary Policy Committee within the bank meets every 2 months to determine the monetary policy stance for the next 2 months. For more information, you can contact the Bank of Namibia through any one of the following platforms. Bank of Namibia, keeping you in the loop about policies that affect you. Have you ever wondered how much money is circulating the Namibian economy? Or how banks in Namibia determine the interest rates that they charge you to borrow from them? Well, both those things are determined by what is called monetary policy. Here's what it is, and more importantly, how it affects you. Monetary policy involves the actions taken by a country to influence two primary things. 1. The total quantity of money circulating the country, and 2. The interest rates within that country. Most countries do this to accomplish the following goals: the stability of the prices of goods and services, and economic growth. For Namibia specifically, monetary policy also aims to maintain the one-to-one fixed currency peg between the Namibian dollar and the South African rand. This allows Namibia to import stable inflation from South Africa to accomplish the two goals of price stability and economic growth. A common monetary policy tool is the repo rate. This is the rate at which commercial banks borrow money from the Bank of Namibia. The repo rate determines another interest rate called the prime rate, which is the benchmark interest rate commercial banks use when lending to their clients. This is what determines the interest rate charged for loans such as home mortgages and vehicle financing, as well as business and personal loans. The Bank of Namibia is the sole monetary authority in Namibia by law. The Monetary Policy Committee within the bank meets every 2 months to determine the monetary policy stance for the next 2 months. For more information, you can contact the Bank of Namibia through any one of the following platforms. Bank of Namibia, keeping you in the loop about policies that affect you. Have you ever wondered how much money is circulating the Namibian economy? Or how banks in Namibia determine the interest rates that they charge you to borrow from them? Well, both those things are determined by what is called monetary policy. Here's what it is, and more importantly, how it affects you. Monetary policy involves the actions taken by a country to influence two primary things. 1. The total quantity of money
Governor Gavahab, Deputy Governor Dan, Officer in Charge Mr. Masuri Ikwa, Monetary Policy Committee members, management and staff of the Bank of Namibia, members of the media, distinguished invited guests, ladies and gentlemen, good morning. I'm not hearing any response. Good morning. Good morning and welcome to the sixth and final monetary policy announcement for 2024. We are delighted to welcome our media practitioners and wish to thank you for honoring our invitation to join us today. We also wish to extend a warm welcome to our online viewers and to those who are tuning into the broadcast coming to you live from the Bank of Namibia auditorium. Over the past 2 days, the Monetary Policy Committee, chaired by the Governor of the Bank of Namibia, convened to discuss and determine the appropriate monetary policy stance for the country for the next 2 months. A decision was reached yesterday, and the Governor will announce and unpack it shortly. Thereafter, we will welcome questions from the media practitioners in the room. Those will be the proceedings for the morning. Once again, welcome. My name is Nafiku Hamunime, and I work for the bank's Strategic Communications Department. With those introductions out of the way, let me now welcome the Governor of the Bank of Namibia, Mr. Johannes Gavachab, to deliver the final monetary policy announcement for 2024. Governor, the floor is yours.
Thank you, Nafiku. Good morning and welcome. The Monetary Policy Committee of the Bank of Namibia decided to lower the policy rate by 25 basis points to 7%. This decision underscores our commitment to fostering growth and prosperity. At the heart of this commitment lies the core principle of monetary policy, that is, ensuring low and stable inflation. By anchoring stability, we create a solid foundation for sustainable economic progress, safeguarding the well-being of businesses and households alike. This decision was reached following a comprehensive review of current and expected domestic, regional, and global economic developments. Let us consider domestic developments that has influenced this decision. Domestic economic activity continued to expand during the first 10 months of 2024. The domestic disinflationary process progressed steadily since the previous MPC meeting, while growth in private sector credit extension, PSC, improved despite remaining subdued. The merchandise trade deficit widened further, while the stock of international reserves remains sufficient to maintain the currency peg and meet the country's international financial obligations. Domestic activity strengthened during the first 10 months of 2024 relative to the same period in 2023. The expansion was primarily driven by mining, electricity generation, wholesale and retail trade, tourism, communication and transport sectors, and the livestock marketing subsector. However, the diamond and crop production subsectors contracted during the period under review, while the construction sector remained subdued. Expected real gross domestic product growth has been revised upward since the last MPC meeting. From 4.2% in 2023, the real GDP growth for 2024 as a whole is projected to moderate to 3.5%. That is 0.4 percentage point higher relative to the projection at the previous MPC meeting. The upward revision emanated from a stronger than anticipated performance in the primary industry, especially gold mining. Likewise, the growth projection for 2025 has been marginally revised upward by 0.1 percentage point to 4%. Risks to the domestic economic outlook stemming from external factors have gained more prominence, while those from domestic factors remain broadly stable relative to the previous MPC meeting. External risks include the escalation of geopolitical tensions, geoeconomic fragmentation, and weaker global demand. Other risks are sovereign debt distress, renewed fluctuations in commodity prices, and the contraction in the Chinese property market. Internally, drought conditions and water supply interruptions continue to pose downside risks to growth outlook. That is particularly as far as water is concerned in the coastal towns. Domestic inflation decelerated further since the last MPC meeting. Inflation averaged 4.5% in the first 10 months of 2024, a notable deceleration compared to 6% in 2023. Similarly, inflation slowed from 3.4% in September this year to 3% in October 2024. The inflation rate registered in October 2024 is the lowest since February 2021. The disinflationary trend is attributed to the sustained lower average food inflation and most recently, the deceleration in transport inflation. Looking ahead, the medium-term inflation projection remains unchanged from the previous MPC meeting. We now forecast 4.3% for 2024 and 4% for 2025. The annual growth in PSC remains subdued. In this regard, PSC growth averaged 2.2% during the first 10 months of 2024, lower than the 2.5% recorded during the same period in 2023. The sluggish growth has been attributed to weak demand, reinforced by the high interest rate environment. Since the last MPC meeting, however, annual growth in PSC improved to 3.4% at the end of October 2024, from 2.1% at the end of August 2024, driven by both businesses and households. Namibia's merchandise trade deficit widened further, reaching 31.6 billion Namibian dollars during the first 10 months of 2024, relative to the 28.2 billion Namibian dollars during the corresponding period of 2023. The wider trade deficit is largely due to increased import payments, especially in the categories of consumer goods, machinery, and base metals. The impact of higher imports on the credit deficit was, however, partially offset by a rise in export receipts, notably from gold and uranium. The stock of international reserves rose to 60.9 billion Namibian dollars as of October 31, 2024, compared to 57.1 billion Namibian dollars at the end of September 2024, primarily attributed to SACU inflows. This level of reserves translates to an estimated import cover of 4.1 months, which remains adequate to sustain the currency peg between the Namibia dollar and the South African rand, and meet the country's international financial obligations. Excluding hydrocarbon exploration and appraisal-related activities, the import cover stood higher at 4.9 months. Let's consider the global economic developments. Global economic recovery has slowed somewhat since the previous MPC meeting. Inflation rose in most monitored economies, while the monetary policy easing cycle continued to gain momentum. The global economic recovery is estimated to have slowed since the previous MPC meeting. Among the monitored economies, available third-quarter data indicates that growth has moderated in the United States, United Kingdom, Japan, China, and Russia. Looking ahead, the International Monetary Fund in its October 2024 World Economic Outlook projected a stable growth rate of 3.2% in both 2024 and 2025, broadly unchanged from the update they have provided in July 2024. International prices of key commodities were mixed relative to the previous MPC meeting. Buoyed by safe haven demand, the gold price surged to a peak of nearly $2,800 per ounce in late October 2024, but thereafter retreated to around $2,640 per ounce at present, roughly the level observed at the time of the previous MPC meeting. Zinc prices increased, partly reflective of the rise in demand from China, while copper prices softened somewhat but remained elevated. Furthermore, maize prices were higher, partly driven by unfavorable weather conditions. Since the previous MPC meeting, diamond prices have been fairly stable but remain significantly lower than in the corresponding period a year ago, reflecting weaker global demand and competition from lab-grown diamonds. Uranium spot prices declined somewhat since the previous meeting, but remained elevated relative to the same period in 2023, sustained by strong demand for cleaner, safer, and more secure energy. The Brent crude oil price trended downward since the October 2024 MPC meeting, mainly due to weaker global demand. Global equity markets gained since the last MPC meeting, led by the S&P 500, which has continued to set multiple record highs. The upward momentum was partly driven by optimism regarding the November 2024 US election results and monetary policy easing. Bond yields rose somewhat owing to the ongoing gradual reversal of quantitative easing and the anticipated expansionary fiscal policy in the United States. While the broad trend continues to be downward, global inflation rose marginally in most of the monitored economies since the previous MPC meeting. In the advanced economies, inflation moderately increased in the United States, the Euro area, and the United Kingdom, but slowed in Japan. Similarly, across a key emerging market in developing economies, inflation was higher in Brazil and India, whilst decreasing in South Africa, China, and Russia. On a positive note, global inflation is projected to decrease in 2024 relative to 2023 and decelerate further in 2025, with a faster pace of disinflation expected in advanced economies than in emerging markets and developing economies. Monetary policy easing has progressed across most of the monitored economies since the last MPC meeting. The US Federal Reserve, the European Central Bank, the Bank of England, the South African Reserve Bank, and the People's Bank of China all reduced rates at their most recent MPC meetings. Meanwhile, the Bank of Brazil and the Bank of Russia have tightened policy rates, while the Bank of Japan and the Bank of India have held rates steady. So what's our policy stance then? In deciding on an appropriate course of action, the MPC noted the most recent slowdown in inflation and welcomed the medium-term inflation outlook that remained well contained. Risk to the forecast, however, remained. The MPC was further gratified by the moderate pickup in private sector credit extension growth, which in the latest print marginally outpaced the concurrent inflation rate. Noting the relatively high level of domestic real interest rates, the ongoing need to support the domestic economy, the adequate level of foreign reserves, orderly capital flows, and recent monetary policy easing trends in key central banks, the MPC unanimously decided to reduce the repo rate by 25 basis points to 7%, with immediate effect. Commercial banks are accordingly expected to reduce the lending rates by 25 basis points, bringing the prime rate to 10.75%. The adopted policy stance will continue safeguarding the one-to-one link between the Namibia dollar and the South African rand, while supporting domestic economic activity. In deciding on this policy stance, the MPC also considered the policy rate differential with the South African Reserve Bank, with a keen desire to close the gap over the medium term. Furthermore, the committee welcomed the current fiscal policy stance, which is supportive of macroeconomic stability, underlining the importance of government's growth-friendly fiscal path and investment in growth-enhancing initiatives. Finally, the MPC deliberated on the potential implications of the South African Reserve Bank's proposed downward revision of its inflation target for both South Africa and Namibia's monetary policy and inflation trajectories. Thank you for listening to me. Now, Fiku.
Thank you very much, Governor. We will now open the floor for questions. If you have a question, there are microphones on either side of the room. Please make your way to the front. Remember to state your name and also note the organization that you represent. Are there any questions in the room? Khala. I see another hand in the front. Please make your way to the podium.
Good morning, Governor.
Good morning.
My name is Kayula. I'm a freelance journalist. I just want to know whether Namibia has concerns over Trump's new tariff plans. Thank you.
Good morning, Governor. My name is Shania Lazarus. I'm a reporter at the Namibian newspaper. So I have about 4 questions. The first one was sometime last year in December, the Bank of Namibia and NAMRA launched a trade verification system. Now, one of the things that was highlighted during that launch was we're trying to sort of lessen or shorten the deficit between our trades, between import and exports. So I just wanted an update to find out how has the system been working, because we have not received any report from that since last year. Also, yesterday we somewhat concluded our elections. So I wanted to find out during our election process, and also of course after the announcement, how are our markets doing? Were there any currency fluctuations? Did our currency go up, considering we now have a female president? You also mentioned that one of the risks to the domestic economy was a contraction in the Chinese property market, which I quite really do not understand. So I would really appreciate if you could probably explain to us how that affects our domestic market. And how do you expect non-performing loans, how do you expect the loans to perform come early next year? We do know that we are heading into December and things do get quite a little messy during the season, so we are very appreciative also because you have given us some sort of relief to enjoy our bonuses this December. And lastly, Governor, I would love to find out, considering we are now gonna have a new president next year, are you concerned about remaining governor come next year?
So why don't you take this and, please go ahead if you need to go ahead.
Good morning, Governor. Siama Lipa from the NBC. Some of the questions were already posed by my colleagues, but given that growth in the private sector credit extensions remains subdued, what measures is the bank now considering to stimulate credit growth and support economic activity? And how does the widening merchandise trade deficit impact your monetary policy strategy? The other one would be now, what measures are in place actually to mitigate potential capital flight due to the differential with South Africa? Moving forward, how will the central bank ensure coordination between the monetary and fiscal policies to maintain economic recovery and avoid inflationary risks?
Thank you. Those are very good questions. Difficult questions as well. The TVS questions I will outsource to DG Duns, is much more closer to me. And the question around growth in merchandise, I'll outsource to another MPC member, Dr. Johan. Let me start with the elephant in the room, and that's the elections. Obviously, you all have got questions. Let me start with the first one around President Trump. We all sort of anticipate that emerging markets could face headwinds from President-elect Trump's agenda. Normally, we don't comment on election outcomes, but to the extent that it relates to our mandate, we could volunteer some views here. So if you look at what's been promised during the campaign by President Trump, we could probably see a looser fiscal policy. We could see tax cuts that will boost and stimulate the economy. So that will be inflationary. So what markets will expect then is for interest rates to rise. So the combination of a looser fiscal policy and tax cut could mean probably tightening of monetary policy, and interest rates could be increased. That would mean the US dollar will be stronger. So what's the impact on us in terms of President Trump? From a trade perspective, very little, negligible, very immaterial, in my view. The biggest impact will probably come from the strong greenback, strong US dollar, because if it is strong, it could affect our exchange rate. So that is, as far as President Trump is concerned. Clearly, the big one that everybody is talking about is tariffs. And tariffs has got the potential to reduce global trade, because trade is getting quite fragmented. It's not benefits of globalization that we had. Secondly, it could reduce domestic US demand, and it could increase inflation. So that's the impact of trade that we see it. But from a Namibian point of view, the impact from a trade perspective is very negligible at this stage. The impact we'll probably see from the currency and the exchange rate. So that's on President Trump. TVS, I know DigiDan will deal with that. Let's look at our own elections. And strong economies are built on strong institutions, strong systems, robust processes. We had several election cycles in Namibia with a very demonstrable track record that things have been quite orderly. So from our mandate point of view, do we see any impact in the near term on inflation? No. Do we see any impact on the exchange rate short term based on our elections? No, because we have got a PEC arrangement with South Africa, and the drivers of our PEC is largely not political developments in Namibia. From an investment perspective, we could say investor confidence have been stirred but not shaken. So in the near term, from a mandate, our mandate point of view, whether it's going to impact on our inflation, whether it's going to impact on the stability of the financial sector, I don't see any material changes and influences at this point in time. So that's on the Namibian elections and the performance of the market. So we haven't seen currently any material impact on the markets we can share with you. What's the impact, what's the latest on the Chinese markets? One of the MPC members actually highlighted that there is a report that the sentiment in the Chinese property market is pretty challenging at this stage. And he actually mentioned that between 60 to 90 million apartments are vacant and empty currently in the larger parts of China. So clearly, if you've got so many vacant, empty residential property, and those people must have raised, developers must have raised money. And if there's no rental income, just think about what that would do to the stability of the financial markets. So that's the sentiment that's challenging around the property market in China. NPLs. Oh, let me just give to DG Dunn and to Dr. Johan on TVS and growth in merchandise, and then I'll come back with the rest of the questions.
Do you want us to cover NPLs also?
I'll deal with the NPLs.
Thank you. So Namibia's trade verification system avails a single window of trades coming into Namibia and trades leaving Namibia, imports and exports. What it does, it matches the trade with the actual money flowing into Namibia. It matches the actual import in Namibia with the funds that leave Namibia, or the actual export with the funds being received from Namibia. It avails its single window of opportunity to NAMRA, to all the banks, and to the Bank of Namibia to match. So this is one component in the bigger basket of addressing the trade deficit, but it's not the only one. It actually plays a minor role in the bigger address of the trade deficit of the country. To actually address that deficit, we need to export more. But I'll be available with the economists after the engagement this morning for us to further unpack that trade deficit and actions that we roll out as a country to address that. Will that be in order? Thank you.
Thank you. Then on the further point, of course, we have been quite happy to note that our exports of gold and of uranium have been rising very nicely, which is a good thing. But overall, our trade balance remains very significantly negative. And of course, the current account balance is the more overriding important thing, which looks not just at the goods, but also at services. And there we are seeing quite hefty deficits, which in a certain way means that we are spending much more on imported goods and services than what we are actually receiving as proceeds from exports of goods and services. In terms of the impact on monetary policy, if the deficit on the current account is very large, then it is an indication that you might be living beyond your means and should be wary. However, in our case, we currently have a very substantial part of our import bill that's attributed to the exploration of oil in the sea. And for those elements where typically you would find perhaps a Norwegian firm that's doing the drilling work in the sea, and you would have a foreign oil company major paying for those services, the money does not flow really through Namibia, and it's not a drain on our reserves. It's a payment from a foreign oil major company to a contractor firm that does the drilling in the sea, and in that way it does not touch our foreign exchange reserves. So were the current account or the merchandise trade account deficits to become so large and not financed in this elegant way, then of course it would be indicative of reason for greater caution in changing interest rates downward. But that is not the assessment which we currently have. We've found our reserves, our foreign exchange reserves, to be fairly constant at a comfortable level where we do not have excessive worries, and therefore there is the room to cut interest rates as has been done today. Thank you.
Thank you, Deputy Governor Dunn. Thank you, MPC member, Dr. Johan. So the next question was around the NPLs, non-performing loans. Any non-performing loan is a critical risk to the stability of the financial system. We all know that high levels of NPLs can erode bank profitability, they can weaken capital buffers, they can impair lending, and ultimately they can threaten growth. So that's what NPLs are going to do if you don't manage them. Currently, NPLs are around the 6% level, and we have got a prediction model for NPLs over the next 4 quarters. And that projection is that NPLs will be below 6%. We were concerned about, if you look at the total loan and advances book of all the commercial banks, about NPLs in general. And there's one sector within the total loan book that was concerning because of the drought. That's loans to the agri-sector. So last year, September, the NPLs on that book, on the agri book, was around 8%. And that has gone down now to about 6%, and we expect that it will, because we have announced some relief measures that you have seen that we have implemented in October this year. So we expect that the NPLs will also come down because of drought. Our farmers need some relief, and that's been implemented. We hope that over the next 12 months that we'll see not only relief to the farmers, that the NPLs will also come down. So that's it. In terms of capital flight to South Africa, at this stage we are not so concerned. We don't see anything that is discomforting in that space. You know that we have got the domestic asset requirements in terms of capital flows between the two countries, particularly for institutional investors. And my understanding is that local investors are adequately rewarded and compensated in alternative underlying instruments, like government, interest-bearing instruments from the government. So capital flight, not a concern. Coordination between monetary policy and fiscal policy, yes, we have got opportunities. As the Bank of Namibia, we're an independent entity, but we have got, from time to time, standing meetings with the Ministry of Finance where we coordinate monetary policy and fiscal policy. As Dr. Johan will tell us, monetary policy starts in the Treasury. So hopefully that's my answers. You may come back.
Thank you, Governor. I believe there was still one more question on private sector credit extension.
What was the question?
The question on private sector credit extension is that it's remained subdued. So what is the bank's view in terms of whether or not we expect to see an uptick?
Yeah, so that's a big question, and we were debating why is private sector credit extension so low in our country? Is it reflective of the economic activity in the country? Is there something else? You could say it reflects the economic realities in the country. You could say interest rates were quite at the high level. Now with interest rates coming down since August, you could see an uptick. And even the surveys that we have done are telling us that most businesses see over the next 6 months that the economic activity will pick up. So it's still subdued, but the latest numbers that we are seeing is quite positive.
Thank you very much, Governor. Before we close, we're just going to check, are there any other questions in the room? Okay, we'll take the final two. Sorry, I see 3 hands.
Brigitte has
We'll take the final 3 before we close off. Please make your way to the podiums. Thank you.
Please go ahead.
Sorry, I had an operation, so I can't run that fast right now.
Okay.
My name is Brigitte Weidlich. I'm a freelance journalist for the Allgemeine Zeitung and NBC German Radio. I've got an investment question, and that means it's a question about the Sovereign Wealth Fund. Could you perhaps just elaborate a little bit how far is the legislation for the Sovereign Wealth Fund, and how are the investments going? Thank you.
All right, Governor. So Botswana was just announced to Botswana has just been approved to be a diamond verification center. And this is a good thing considering Namibia sells most of its diamonds mainly through Botswana. So we just wanted to hear from the Bank of Namibia, what is your opinion what is your opinion on this whole new development? And also, Governor, you didn't answer my question on your job security come next year with a new president. But also, what is the message for the holidays from the Bank of Namibia to the Namibian nation, considering this is our last repo rate announcement for the year?
You have got difficult questions that you are asking. So in terms of the appointment or tenure of the governor, our governors are appointed for a specific period of time. The governor and the deputy governors, and the term expires at the end of December 2026. So there is no change in law in terms of the appointment and tenure of the governor. So it's unlike other countries where government changes and the governors changes. We don't have that arrangement. In terms of our law, the governor can only be changed on 3 grounds. If he is incapacitated, if he is involved in criminal activities, and what's the third one? I cannot remember the third one. So that's actually not, you cannot remove the governor for a political reason. So that's what our law is. It's not legitimate. So I'm not worried about my tenure at the Bank of Namibia. I'm not concerned about that. So the other one is on the Sovereign Wealth Fund. Brigitte, I can give you some figures Kiran, that's not a big change. The high-level message is Sovereign Wealth Fund is performing very well. In terms of the legislation, I've seen the draft legislation being finalized, and I'm told the first half of next year they'll take it to Parliament to finalize it. That's my understanding. But in terms of the actual performance, it's doing quite well. If there's anyone from financial markets, please just get the figures and we can provide that to Brigitte after this engagement. But there's not a big change since the last MBC meeting where I've provided all the figures. The performance is linked to the performance of the underlying investments. And you have seen that equity markets had a very good run and bonds have done very well over the past time. So I think the performance will be quite good. In terms of Botswana, I'm not so sure whether I've got an opinion around that, because Namibia is taking its diamonds for valuation to Botswana currently, right? And from there it's being marketed. So if Botswana has got the same benefits as Brussels, did you say Brussels? What's the other place? Antwerp. So I'm not so sure whether I'm qualified to talk about that, whether any of the MPC members can provide a view around that. So Dr. Postrick, do you have a view around that? You are not an MPC member, but you know, he's today sitting in as Director of Research.
Yeah, thank you. In fact, it's true that actually the process of evaluation, there were actually such proposal, and there was likelihood that Botswana would actually have lost the capacity of being an evaluator of diamonds. But of course, it's good news that they have been, the decision have been made and they have been accorded that status, which actually is actually good for us as Namibia, given the closeness in terms of geography. In fact, we don't need to send our diamonds abroad, but too far in Europe, but we can actually continue the usual process of actually sending them to Botswana. So it's actually a good news for us. So yeah, thank you.
In terms of the last question you had around, this is the last MPC meeting, I think December is a time for family. It's a time for us to go and have a proper rest. So my message to Namibians would be happy holidays.
Yeah, my name is Choma Kaira. I work as a freelance journalist. Recently, Governor, there was a hack on commercial banks. I know Standard Bank was hacked and other banks maybe. So what I want to find out is how far has the investigation into that hack gone, with being the central bank? And also, I worried about the security of the commercial bank on the IT side, that commercial banks can be hacked. Thank you.
Yeah. Shamwa is a good question. If you ask me what keeps me worried about that is cyber attacks. It's because it's not whether we will be attacked, it's just a question of when. So as the leaders of institutions, we should not think whether we will be attacked. Should start thinking about how do we respond when we are attacked? How long does it take to get out of that attack? Because technological advances offers immense opportunities, but it also introduces some key risk. And one of the challenges that it introduces is cyber attacks. And cybercrime is a threat that we need to think about in the Bank of Namibia. We have gone so far where we have sort of initiated a cyber council for the country so that we can have a proper response on the country. Yes, you are quite right. We have got several controls in place, like incidents reporting to the banks within 24 hours when they have got an attack. And you're quite right, there was an attack recently at one of our commercial banks. They are required to comply with certain cybersecurity requirements, and we are quite comfortable with what the banks are doing because the banks also know it's a big reputational risk for them. If they are attacked, they need to make sure it doesn't happen, and if it does happen, I can tell you from the attack that we have seen and from all the reports that we have collated, that most of the people or clients that have been affected have been refunded. And Standard Bank has a claim with the merchant, whose bin was used in this attack. So it's about how quickly we respond or get back and contain that and move on. This is not going to be the last one, I can tell you that. It's just the reality. And it's not a Bank of Namibia or a Namibian commercial bank issue. It's a global issue. It gives us lots of opportunities, but it has got serious privacy issues. It has got serious cybercrime issues. And we are comfortable with the controls we have got in place. Chamo, does it help?
Yes. Thank you very much, Governor. Can we please give the government and MPC members a round of applause? With that, we have now come to the end of our proceedings for the morning. On behalf of all of us at the Bank of Namibia, thank you for your attendance and for your participation. We wish you a joyful and safe festive season. Until next time, thank you and goodbye.
Have you ever wondered how much money is circulating the Namibian economy? Or how banks in Namibia determine the interest rates that they charge you to borrow from them? Well, both those things are determined by what is called monetary policy. Here's what it is, and more importantly, how it affects you. Monetary policy involves the actions taken by a country to influence two primary things. One, the total quantity of money circulating in the country, and two, the interest rates within that country. Most countries do this to accomplish the following goals: the stability of the prices of goods and services, and economic growth. For Namibia specifically, monetary policy also aims to maintain the one-to-one fixed currency peg between the Namibian dollar and the South African rand. This allows Namibia to import stable inflation from South Africa to accomplish the two goals of price stability and economic growth. A common monetary policy tool is the repo rate. This is the rate at which commercial banks borrow money from the Bank of Namibia. The repo rate determines another interest rate called the prime rate, which is the benchmark interest rate commercial banks use when lending to their clients. This is what determines the interest rate charged for loans such as home mortgages and vehicle financing, as well as business and personal loans. The Bank of Namibia is the sole monetary authority in Namibia by law. The Monetary Policy Committee within the bank meets every 2 months to determine the monetary policy stance for the next 2 months. For more information, you can contact the Bank of Namibia through any one of the following platforms. Bank of Namibia, keeping you in the loop about policies that affect you. Have you ever wondered how much money is circulating the Namibian economy? Or how banks in Namibia determine the interest rates that they charge you to borrow from them? Well, both those things are determined by what is called monetary policy. Here's what it is, and more importantly, how it affects you. Monetary policy involves the actions taken by a country to influence two primary things. One, the total quantity of money circulating in the country, and two, the interest rates within that country. Most countries do this to accomplish the following goals: the stability of the prices of goods and services, and economic growth. For Namibia specifically, monetary policy also aims to maintain the one-to-one fixed currency peg between the Namibian dollar and the South African rand. This allows Namibia to import stable inflation from South Africa to accomplish the two goals of price stability and economic growth. A common monetary policy tool is the repo rate. This is the rate at which commercial banks borrow money from the Bank of Namibia. The repo rate determines another interest rate called the prime rate, which is the benchmark interest rate commercial banks use when lending to their clients. This is what determines the interest rate charged for loans such as home mortgages and vehicle financing, as well as business and personal loans. The Bank of Namibia is the sole monetary authority in Namibia by law. The Monetary Policy Committee within the bank meets every 2 months to determine the monetary policy stance for the next 2 months. For more information, you can contact the Bank of Namibia through any one of the following platforms. Bank of Namibia, keeping you in the loop about policies that affect you.